All right, how's it going, everyone? This is Anon. None of this is financial advice. It's for entertainment purposes only. Let's see if we're live. I think we are. All right, I get this all set up, and then we'll kind of go over a couple things. I need to review and accept YouTube's new monetization policy. Oh, sure. Review. Okay, I accept terms. I reviewed things. I don't know, I just signed. Probably should read that later. Okay, I guess I am all set up now, and I should be able to go to content and get this going. All right. So how's everyone doing? Oh no, OBS, what's going on? You just closed the dockable window. How do I turn on my docs? Here we go, chat. There we go. Let me see if I can move that somewhere so I can see it. Okay. So, what do you guys want to cover tonight? I kind of was going to focus on some BBBY, some Bed Bath & Beyond, because obviously that's a hot stock. I keep buying ATER. I can't help myself. I mean, we'll talk about ATER as well. I will go and let me just pull up something real quick. So I guess the best way to talk about APRN is probably to review what I think is going to happen. And, that way you have a better kind of sense of what's going on. So this is the S&P 500. Here is the COVID crash and the recovery. Very nice long bull market with a nice W here during the election cycle. And since basically right before they were going to, tighten, the market has been in this consistent downtrend. ATER looking pretty dead. Wasn't it up to today? I think it was up, like 8%, something like that? And they had a pop at the end. Someone bought, I believe it was somewhere near 300,000, 400,000 shares at the end of the day. Still getting far less volume than obviously like a Bed Bath & Beyond, but I mean, at this point, I think pretty much the only people in retail are either the ones who have just long-term like Tyrion, and they're buying down at these levels, or people who got stuck, obviously, from the last squeeze, or you have basically the shorts. That's all that's left. John Bickerton, it's under $1. Yeah, I think it closed, though, if I remember correctly, it closed under at like 97 cents, I believe. So, John, you understand why it's there, right? Because of dilution, right? Yeah, it closed at 97 cents today. So if it goes over $1 and closes, all it has to have is one bid over $1. And it should reset the basically the filing that they have to, or the non-compliance. So if you don't know this, for a stock to remain listed, it has to remain over $1, or it can't be under $1 longer than, I believe it's 30 days, and then they send out a notice, and then the company has to basically say, what are we going to do about this? So in Ethereum's case, they are not at the 30 days yet, so they're still fine. Yeah, so John, basically the reason why, here, I'll just pull up Ethereum if you want to talk about it. So here's Ethereum. And I'll zoom in a little bit so you can see. And I kind of charted this out for people so they would know. All right. Let me grab over here. So this was the last run, right? This was the run from basically, I believe it was like 210 was the low, all the way up to 726 or something like that, 727, right? And then what we found out was Armistice basically during this time frame right here dumped out their entirety of their basically 10% of holdings. I think they own 9.99%, which is why the stock fell so much, right? And then they basically just shorted. They were shorting all in this period. And then what ends up happening is they get it really just hammered down. This was their earnings. Earning was actually not that bad. Retail was buying it, and the shorts hammered it back down because they knew Ethereum needed to basically raise cash. So what we end up finding out is right around here, Ethereum tells everyone, hey, this is what we think our revenue is going to be. It's probably going to beat. And the stock pumps up. And the next day they tell us that there's dilution and a significant amount of dilution, right? So what they did was they issued out $2 warrants, but they sold them for $190. So what I think it added, I believe, let me pull up something real quick. So we'll pull up dilution tracker real quick. So we'll go pull up Ethereum, and you'll see right here, what they did was they sold these things at 190, and they sold, what was it, 10, yeah, there was a total basically of like shares and warrants. These particular warrants right here that were September warrants, but they came out in October. It's like 10 million of them, 10.5 million shares, right? Slash warrants. So this was 10.5 million, plus they did another like amount of shares. So Armistice now holds like, I think it's like 8 million shares along with these warrants. So there's a good amount of dilution that happened there. So what ends up happening is the stock gaps down and it's just been hammered down here, right? So we get hammered. Everyone's like doom and gloom. We're going to go through a reverse split. You know, the world is ending. I'll be honest with you guys, reverse splits are not the end of the world. It's just like splits aren't like the best thing in the world. Like, all that happens is it's a changing of value in appearance, but not in actual like monetary value. So as long as you are well aware of that, you'll be fine. So if you look right here, what ends up happening is this large gap down. Remember, gaps fill, and look how many gaps are left to the up. Like, so there are no gaps to the downside. So this is the whole thing. If you saw a gap, it would be in green, but we have nothing below us. And look how many gaps are left to the upside. You've got 1, 2, 3, 4, 5, 6, 7, 8, 9, and 10 gaps there. Yeah, so there's 10 gaps still to the upside for Ethereum. And remember, they like to find liquidity. So what ends up happening then is, you know, we're down here. I think what's going to happen is they're going to try to keep this under $1. If it happens to go above it and close, then it restarts the clock. So, but what I think is going to happen is this, and, you know, obviously this is just my own kind of thoughts, but you've got the SPY here, and it's at a pivotal point. So I'm going to zoom out a bit so you can kind of see kind of why and where I'm thinking. So all these lines are gaps. And remember, you know, liquidity likes to find these gaps eventually. So we've got this gap up here at 419 to 421. That's considered what's called a bear gap. So it's when it gaps down. But when it gaps up during this run up here, you left all these gaps down here. And if you notice, remember I put out those videos, I don't know if some of you guys saw them, but the trend is your friend is what this guy back in the 80s was saying. And obviously we've always known that, you know, but in this case, I'm kind of sticking to that point where if you look at this right now, we have not broken above this resistance and then back tested and gone back up. We can. We'll find out pretty soon, because if you look at where we are right now on this chart, we're getting close to this. So as you can see, we break down across here. They tried gapping up this day and back testing it, and it just fell through. So this was not a show of strength. Now we sat here, we came here. If we touch here, break through, back test, and come back up, then we're probably in the clear, at least to fill this gap here at the 420. Here's the thing. There's still all these gaps down here. And what's happened, if you count, you rejected there. 1, 2, 3, 4, 5, and this is coming up on the sixth attempt at this going over this line, and every single time it's rejected. So at this point right now, the trend is saying that the SPY might hit this 400 mark, 399, 400, basically just depends on when it happens. Once it hits this, if it goes through, back test, and goes up, then we're okay. But if it breaks down again, the next logical space is 340s on the SPY. Now, if the whole market's selling off from 400 down, we're losing 60, points, that's a pretty significant move. And what that would probably do is, if we go back to Ethereum, that would probably push us down again into this area here again. Now, at some point, it won't make sense because, say for somebody was like, oh, it's going to go to a quarter. That doesn't make a ton of sense, just because if you look at Ethereum's balance sheet, if we were valued at a quarter, right? If we can do simple math on this, and I'll just show you how it works. So let's say we've got 80 million shares as a float, right? Let's just round it up. So we have 80 million shares as a float. We would just take our calculator, which I have right here, which didn't pop up on the screen, but I will pull that over. So you take 80 million shares, right? And we times it by a quarter. That would only be a $20 million market cap. Now, if you go against the filings, and you just pull up a 10Q from the last quarter, you will see that on the balance sheet right here, you had $25 million cash, you had $60 million in inventory, and current assets is 101. Now, that's saying that basically Ethereum is worth 4 times less than what they're showing on their balance sheet. Yeah, this is live. What's up, Dirty? So, it doesn't make a ton of sense to have a market cap that's 4 times less, than what you're showing. Yeah, I know. It's been a while. I apologize. Bi-weekly, more like bi-monthly right now. So that's where I'm just telling you guys, as far as, it doesn't make a ton of sense for it to be at a quarter. Now, you could argue your inventory is selling through, this number is going to be obviously different. This number is going to be different, but we also sold those warrants, which means that we had more cash. So, then you also bought a company, so you have to minus that out. So you can play with this number all you want, but basically there is a firm value of where this thing can get to before it becomes just, okay, well, that's almost a steal, because if this company doesn't go out of business, you're basically buying stuff 4 times less than what they're showing on their current assets. So it's like at a 25 price per book right now. We'd have to look at, let me see who's got that easy. I think Ortex does. Let's pull up, see if they've got it in here. Price per book. It should be on here somewhere. Valuation multiples. Yeah. Hold on, there's book value. Book value would be about 26 cents from, that's 2021 though. They don't have an updated one unless we can do, let's try quarterly. Right now, as of the last one, it was 71 cents. So your price to book right now is about 71 cents. 67, sure. I mean, we can play with the numbers a little bit. Ortex is not perfect, obviously, for this, but the rough ballpark is that's what your book value is on the stock, is roughly price per share. Or what are you putting out? PS? Are you asking price per book or price per share? Oh, you're talking about price per sales? Okay, price per sales. They have $1.24 for price per sales right here. That's what they showed from the third quarter. Let's see what some of these ratios are. Okay, you want price per sales? So I guess the back button doesn't work there. I go back to fundamentals. Do I have one of them? No. Cash flow. It's single. All right. But yeah, I was going to say, so I mean, the company's in like, everyone that's been in Ethereum knows that right now they've been struggling. They've been struggling since basically the shipping rates went from, just to show you this is a stock that went from basically all the way down to 142 up to $49 a share, and then got absolutely just killed by shorts and the fact that their shipping rates went 4x. You've got 70 cents from a filing, 0.89 tangible book per share. Okay, sounds good. Thanks, Dirty. So basically, this I'm just explaining what it came, or what I guess what it's been doing. So you had this massive run here, right, during basically February when all the meme stocks were running, and then just got hammered down when the shipping rates came, right? And then what we didn't realize was how badly those shipping things were going to basically lag, because we had the secondary run. It went down to 210, I think it was 210, all the way up to like 18. Had a secondary run, and this is where most people got into Ethereum. I was in the same thing. So you see it gap down largely, actually on an earnings beat, interestingly enough, and then it finally hit the spring, and then it ran back up, and it squeezed. And then what happened was High Trails shares diluted and hit the market and allowed the shorts to kind of get out of it. Then we had the secondary run here in, I think it was April. Yeah, March into April, and then we went from basically 210, I think, again to, or was it 210 this time? I think it was 210. It was like 210 up to 727 or something like that. And then that's when Armistice dumped out on everything. So right now, after they diluted again, this is where we've been kind of just chilling in this down range. It gapped down here and then went through. I've got a better view of it, obviously, on this. So I drew this chart out so people could see. So here is kind of where I see Ethereum going. Right here, I marked out these levels right here, which is, that should be over here. Armistice paid basically $290 for these particular warrants, and they paid, where's the other one? Armistice paid right here, $190 for the second set. So what did they do last time they got warrants? They pumped up the stock. Well, Armistice can't do anything until right here. So I think we're going to be chopping around and maybe even take another step down before we end up, I don't know if it's going to happen right on the date, but I would say anytime after that time could be, where Ethereum might take off a little bit, or if they want to get rid of some of these shares that they have because they've got all these warrants that they need to unlock, it's possible we could see a run up first, come back down, push down, and then run back up afterwards. This is just me thinking out loud. I don't know for a fact, but I'm just telling you right now that I drew these lines up because I want people to kind of understand. So this is where Armistice starts getting profitable. This turquoise line right here. So that's how much they paid for these things. We're sitting down in here. So at this point right now, Armistice paid $190 for these things, and we're sitting down here at 97 cents now. So they're not profitable on any of these trades so far, as far as long position. Now, are they short? That's very possible. And that might be why they got these warrants, as basically that's their hedge. So what they do is they push down the stock, right? They make them bleed out. They make them dilute when they're low. And then once they can't basically push it down anymore, what they do is they switch long, push the stock back up, and then reshort it. So my kind of like thoughts are for this next run, I would imagine it's not going to 7, I don't think. I think it's going more like in the like 3 to 5 range is kind of where their sweet spot is for this. So if they were able to basically pay 190 and sell it in the 3s, 4s, 5s, whatever we allow them to basically get it to, if they see hype and volume picks up, you could see another run on it. But what their goal is going to be is to basically dump out up here and get us hyped up and then sell into our buying pressure and then reshort the stock back down. So that's kind of how these guys operate, and at least that's a trend I've been kind of, and Dirty seen it, and a couple other people in the Discord have seen it. So what I think now will happen is once the SPY, I'll show you again, the SPY either comes here, if we break through and come up, that's awesome. Then Ethereum's probably going over $1 and everything's going to be fine. And then in May, we may see a run, or sometime after April. But if this rejects here and takes the next step down, fills some of these gaps, like this one, in the 340s, and then I don't know if it will go to the 280 ones. There's a 281 right here. If it gets, that's a pretty significant step down. So, you're talking about like trillions of dollars of market cap being lost across the market. But, we'll find out, because everyone thinks it's going up. And they think that this was our bottom, and it could be, but I've seen it so many times where we get bullish. We go, that was the last time. This thing, look at this. We ran from, was it 360 all the way up to 430. And we were like, yeah, everything's going to be great. And then it rejects and gets back down, makes a lower low. So if you look, we keep making lower lows, right? We keep making lower lows, and what would make sense is we make another lower low here, and then we come back up maybe and touch that and keep going. Who knows? But like, there it is. Do you remember what the float was when it ran to 7? I believe it was around 40 million, roughly, after you took out insiders, and I think we actually counted Armistice at the time as an insider. So let me see if I have my old spreadsheet from back then, because I had a spreadsheet that I made. That would be interesting to take a look at. See how many shares they had back then. Okay, so I had insiders listed as Yaniv, Susan Latterman, Sarah, Libel, blah, 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 blah. Did we put Armistice in there? No, we didn't. Okay. Then we said, who are our shareholders? Who's got the most? That was from the ETFs. Here we go. Armistice at the time had, I believe, 5.3 million shares. And our float was... Yeah, our float was 53 million when that happened. So I can show you guys here. This was an old one. So at the time, there was basically like 70 million shares outstanding. Finto had ownership at 15 million, and the lendable float basically was like 53 million. So after you took out Toots, they were basically at like 33 million. And at the time, they were short. I adjusted these, but at one point we were 40% short, according to Ortex. So, yeah, James, it did suck. Here we go. So, kind of just wanted to show this and see this pattern, developing. We're going to tell a lot in the next couple days, because if this breaks out, back tests and comes back up, I'd love to see these 420 levels get filled and we head back up and make new higher highs. But in the last couple weeks, it just seems like every single time we touch this, and until we break through this resistance line and really hold it, we had that one thing happen right here. And what happened was we closed the day here, and they literally gapped up on, I guess, I don't know, it was like CPI data, and they started out the day, I think, at like 409. So it absolutely like gapped up hugely, but it just bled off the entire day, and then came up at the very end. And then since then, it basically gapped down. We filled these gaps when we came back up here because there was a pretty sizable gap here, which we've already filled now. So this bear gap already got filled today. And then right here, we left a gap, bull gap right there. And we left some bull gaps way down here as well. So I don't know. I just think it might reject. I bought some puts and just to hedge everything because everything's going. But yeah. 421 to 419 for the bear gap. So basically just 420. So, like I said, we'll find out very soon because in the next couple of days, we're going to basically come up here on here, or we're just going to chop around here and then reject, and then we'll see where it goes. I'm aiming towards reject, which means that I think Ethereum might be back down in, lower than $1, but I would love to see it pop over $1, close there, and then restart the clock, and then, we'll see. All right. I want to talk about Bed Bath & Beyond because it's kind of been an interesting thing that I've been looking with. There's gaps all the way up to $22 a share, right? So you got gaps here at $22 a share, and down here at 15, down all the way to 9.97. Then you have another huge gap here at 11.48, all the way down to. Oh, sorry, that's the one that's 11 to 9. 11 down to 9.97. I guess this one was back in the 15. So this is the 15 gap, and then this is the 22 to 20. So these are all large gaps. So it's interesting that we're just aggressively just flying up here, right? So we've already left, I think, a gap right here. So tomorrow we should see a bull gap here, and I think a bull gap here. So this thing can honestly go either way. And so the question is it going to be one of those, okay, recovery, then, a couple years down the line, they start, doing fine and then fill some of these gaps? Or is it one of those stories where it's like, we're going to come up, maybe fill one of these gaps, and then we'll head back down? The gamma on this thing is crazy, but BBBY will be tough because the call's expiring tomorrow, and then people don't have money to exercise. That's part of it, but here's what I don't think everyone really realizes. So Bed Bath & Beyond needs money very, very badly. And I don't think this is something that a lot of people have been talking about. So let me show you this. So Bed Bath & Beyond right now has a float of like 101 million. I think we kind of, let me see if I can pull up a filing so we can just verify that. So as of, and here's what I really want to show you. If I go down here and I type in shares outstanding, we saw that this was actually at the time 80 million. Right there. So this was a stock that had 80 million shares outstanding as of August, right? When they filed this. Now, if you look at the latest one, I need to type in, I think, hold on. Let's do my filing. Did this one have the, let's see if this one has it. No, that's Form 4, but I guess they don't have to report that. Let's see if this is the extended one. If they have to show the shares outstanding. Because I found one that basically, yeah, it's not this one. Give me 2 seconds. I know I'm trying to remember where I put it, where I found it. Disclosures, was it this one? Yeah, I think it's this one. I looked here and I saw that was it this one or was it the other form? Shares, no, it's the other one. All right, we're going to do BBBY, current filings. Where is it? They left a, is it this one? Outstanding, maybe. It shows 117 million on Webull. Okay. What I was trying to actually point out, according to the filings, is one of these filings in here I found said that they, every time they put out like some sort of like updated filing with the SEC, they have to tell you how many shares outstanding there are on the stock. And what you guys remember is they issued out an ATM on Bed Bath & Beyond. So they literally have an at-the-money offering. Yeah, the one I found basically said there was 102 million, which is up from the 80 million that was back here, right? So when they issued out this ATM, it's because they were burning through cash like crazy, and they basically ran out of money. So literally just to keep their doors open, they issued out this October ATM, right? And it's been, I think they've been using it because you can see the shares outstanding have been constantly going up. So they're literally, while people are buying, the company is selling shares into the market. So their cash needs are really, really high. They need to raise all of this 150 million. So, you know, basically this stock is being controlled right now by, I think, Bed Bath & Beyond, to be honest with you, because, you know, if they didn't touch it, it'd probably just fly. But they want to get their money, you know, while it's still up. You know, they don't want to dilute anymore when it's sitting down at, you know, $1. They want to make sure while they're up here at like 4, 5, 6, that they're getting money that they can lock in now. I know that doesn't make sense because you would think, oh, well, why don't they just wait till it goes to 10? But this is not how these CEOs and people think. They don't want a squeeze. They want to raise cash. And so if they're fine. The board has 600 more available to sell. Yeah, I was going to say down here, they actually have technically almost $1 billion that's on their shelf. They registered the shelf in August to raise $1 billion. So as of right now, they've only issued out this one particular one, but they have the authorization to like sell way more shares. And they may authorize that while this is going on. And then people are going to scream that there's market manipulation and blah, blah, blah. But, like, it's not just shorts. Like, the company's literally trying to raise cash to save itself. So, like, I just want people to be aware of that. Because I feel like that's something that's not being talked about. Like, we know that their shares outstanding are going up, which means they are diluting themselves. So, you know, when we see these spikes and these massive, like, you know, you'll see a massive buy spike and then you'll see a massive sell spike. I think it's the company, honestly. So I just want to point that out because I was watching the ticker today and at times I'm going, yeah, I think they're literally just like slowly selling shares into the market, which is obviously making the price bleed. And then, you know, another round of short covering. And then, you know, if somebody gets, you know, caught in a squeeze and there was a margin call, then they get, you know, pushed up and then, you know, the short interest was pretty high. I mean, the short interest right now was like 37% roughly. What do we have according to Ortex? But what this is going to do is don't worry about short squeeze really, because when they're diluting this much, it's not going to cause a short squeeze because they're literally issuing out more shares, which is allowing the shorts to find FTDs. And we're leaving gaps, which means that at some point these things are going to fill. There's gaps up here, and there's gaps down here now. So, you know. All right. So, let's see. So, utilization is still very high. But as you can see right here, days to cover is coming down, right? So it went from like 5 days to cover down to 3, down to probably 2 tomorrow. And you've seen the volume pick up. So at some point, this is going to get limited to the upside on how high this thing can go. So, this is just like me thinking out loud, and I'm not like I'm sitting there with $6 bags. So, on my account, and I've got some friends that are trading, and we all have roughly about like the $6 to $10 range, because a lot of us bought back here when it ran to 20 something. So like we're sitting here, and this is us averaging down here in the 2s. We've gotten our averages down to like 6 to 10. But, I'm just trying to tell the truth, which is the company needs cash, and they are issuing out shares, which means that don't worry about it being on the threshold. It's been on the threshold, but I think it already came off, didn't it? Yeah, it came off here, right? Well, we can check it. Rig show threshold. Let's see if it's still on there. Says it's on there as of, I guess, today. So yeah, I guess it's still on there. Maybe Ortex hasn't updated it yet, but I'm just telling you right now, this is going to the shares that are hitting the market will allow these guys to reset their FTDs. So, and if you kind of look, it looks like as their days to cover is coming down, that means they're actually covering a lot of these shorts, which is why the position is being pushed up. So, yeah, it does look like they've been closing some short positions right now. So if you want to know why the stock price is falling at times, it's probably because the company's selling, honestly. And that's something I haven't heard people talk about that. We don't have the FTDs yet. But what they're going to do is they're going to re-short this. When it gets up to a certain level, they'll buy back in their shorts, and then they'll push it back down. So, I'd love to see it pop up to like that gap fill at that like 11, the 1152 area. That'd be awesome. Even up to the 15, that'd be awesome too. Or even better, the 22. But, I have a feeling that it's going to start sputtering somewhere in this range. And that's just because, unless there's tons more momentum and these guys are able to raise, I don't know, like $500 million of cash. But they're going to do that at the expense of diluting the crap out of their stock. Still getting way more money than they, probably would have if they were, in a lot of other people's situations. But this money could really help them. The question is, do you believe in the board and the company long term? And a lot of people, don't right now. So I did hear the earnings call. I did think she sounded, what was her name? Was it Sue? What's her name? Sue, yeah, Sue Grove. She sounded like they have a plan in place, but they're still burning a lot of cash, so it's not a stock that I, particularly want to hold long unless I can see they raised enough money to keep them going and they start working out some of their long-term debt, because that's the thing that worries me about them. So, but maybe they can find a way. I hope it runs high enough for you to get out of your position. Thanks, James. Appreciate it. Yeah, my bags are basically at 6. I think it's like 60, I don't know, 630 or 640, something like that. So I'd love to be able to at least get out. I think when I saw it close, wasn't that like 5? What did it finish? Yeah, anyone know where it finished after hours? I didn't really look, to be honest. MMTLP, you poor bastards. Yeah. So here's the truth. MMTLP, people got screwed. And it's because everything's wrong with the stock market. Like, it's set up for retail to basically just give money to Wall Street. Hit 580 after hours. Oh, nice. So yeah, it's possible tomorrow I could maybe even break even on that position. I'm starting to sell covered calls. I know that's not probably the best way to do it, but it's making me at least sell those things at certain price levels, or I'm just going to keep the shares. But the IV's high enough now where I'm making pretty decent money on them, so let's see. Let's see how it goes. But yeah, MMTLP, I mean, I am not 100% sure what they're going to do with this because, like, they were tracking something. No, that's MMLP. Oops. Trading view. Yeah, so from this is basically what I understand happened. FINRA and brokers somehow allowed trading to happen on a stock that wasn't supposed to be trading. And they weren't supposed to be allowing people to short it, and they allowed all of that to happen. And then basically people were like, if this is what's happening, this was off the merger, then let's go ahead and buy it. It's an OTC, and they got squeezed. But they shut off, obviously, trading before the merger happened. That actually, I believe, is proper. I think you're supposed to technically turn off trading 2 days before the finalization. So I think that was okay, but basically what it did was it screwed people because they didn't announce any of that to anyone. So they shut off trading so people couldn't sell out of their position, and then they got stuck with this. And then they have millions, I don't know if it's millions, but they had a lot of like FTDs, which aren't supposed to occur at that point. They're supposed to make the shorts close, and I have no idea at that point what they're going to do because like it kind of seems like they just screwed over people and then went, well, we'll probably have to deal with this in the lawsuit because at some point there's going to be a lawsuit, and everyone knows that. So, I mean, there will be a class action lawsuit against them in FINRA probably and market makers, and we'll see. But I mean, obviously you have to prove losses, and then on top of that, you have to prove they colluded to basically screw over people, and yeah. It's just, I mean, the whole thing's disgusting. Like, and the problem is the people who got screwed are regular people. It wasn't like, oh, well, Citadel, messed up, and it's people like us who were like, we finally caught you. You did something messed up, and we're gonna exploit you. And then they go, no, we're just gonna shut down trading, and it's kind of like a Redbox. If you guys remember Redbox. Redbox, I wonder if they still show the ticker. Redbox. No, they don't even show it anymore. I wonder if is there anyone that shows like Legacy? Redbox stock. Like, I'd love to see just like an old, chart of it. Here, that was good enough. So remember when this thing was squeezing up and everyone's like, oh, to the moon, right? Sitting down here at like $2 a share, $1 a share, squeezed up here. Then they turned off options up here. Yeah, it's chicken soup for the soul. But I was going to say, I mean, think about this. So you sat there, you squeezed out them. And they were selling options. They weren't selling options back here. They started selling options when the people were starting to get interested on the stock. They start selling options, and then when they started losing, they turned off options and said, oh, well, we weren't supposed to sell options. Well, it was fine when it was working for you, but when retail started winning, they were like, no. We weren't supposed to be selling options. Like, it's gross. Like, it's like rules for thee, not for me, right? So that's what it reminds me of for MMTLP. Like, it just seems like at this point right now, look around, look for class action lawsuits, and keep your ears and eyes out and start harassing the SEC every single day, because this is the kind of stuff that shouldn't stand, yet it does, because too many people aren't willing to contact and reach out. Like when Ethereum was going through all that crap, I reached out to the SEC, I sent them information, and they did nothing with it. And I understand that's like a perfect example why people go, well, that's why I don't do it. If you're not doing it, but the problem is I think I'm the only one that did it for Ethereum. So if one guy is complaining about it and nobody else is complaining about it, they're just going to go, this doesn't like, things. But if more people were doing it, if more people were like, yeah, I'm going to report that because, this was screwed up, and you stay on them and you don't, squeaky wheel gets the oil. So like, you need to harass the SEC and keep on, Gary Gensler, but you have to do it through their channels. If you're not going to the SEC, if you're not going to basically like FINRA, then if you're just complaining on Twitter, that's not changing anything because they don't care what happens on Twitter. They care if you're actually complaining within their system because they don't read Twitter. I'm sure they read it, but like they don't do the rules off Twitter. They do the rules if you actually file complaints in their system. So I'm just telling you guys that, like, if you want to actually see change in the market, you might actually have to spend a couple minutes, fill out they need the paperwork to be like, yes, this is actually a problem. You complaining on Twitter, there are a billion people and some billion bots could be complaining on Twitter. Nobody cares. All right, let's take a look at Party. Party looked like it was kind of making a head and shoulders. Which obviously is pretty bullish. I don't like the financials aren't great, but they have a ton of these gaps. So each one of these red lines is a gap, and these are gaps that have not filled, right? So all these gaps here, when it gapped down, they all filled here when it's kind of squeezed last time. But they've left a ton of gaps, and they're down here at the bottom. Now, here's my only concern. You have earnings here. Earnings is on March 9th, right? So what's that earnings going to be looking like? I'm like, Greg asks, I don't understand how these people and corporations don't get arrested and charged. It's theft on massive scale. Yeah, but it's white collar, so they don't care. And to be honest with you, here's part of the issue. Like if you're like you rob a liquor store and you steal, $20 cash out of there, you're going to get charged and go to jail. But if you steal billions of dollars from people, you get like patted on the back almost. Like it's like, oh, well, you stole from poor people, so it's fine. Like what? Like it shouldn't be that way, but it is. They almost like look the other way. So that's what you got to do. You just got to keep harassing because it's never going to change unless more people actually care. And you need to care on their system. They just know that retail's lazy and they're not, or doesn't understand how it works, and they're just going to keep doing what they're doing until enough people start raising the pitchforks up and being like, yeah, we're not going to trade in this market if this is how it's going to be. Like, how many people need to get burned by stuff that's obviously corrupt before it goes, well, why are we even touching this thing? I mean, at that point, the playing field is not even, and that's my kind of goal for the the retail collective has always been basically we want to try to educate as much as we can. We want to get more and more people in there reading balance sheets with us and kind of working together. Like, this is supposed to be just a group of us getting together, nerding out over stocks and seeing if we can, hit some home runs every once in a while. Like, I was telling people about BBAI, right? So if some of you guys don't know, this is a stock that got hammered down and then ran all the way up to, I think it was like at 4 or something like that. It was like at one point, like it might have been 4 in pre-market. So it was literally down here at 81 cents, and then they found out that the market found out that they won a $900 million contract from the Air Force over 10 years, which means that their cash flow problems are now solved. They had won previously before that a $14.8 million contract. So here's the thing. BBAI has no volume on their options chains. In fact, they just don't really have much volume. And so the question is, how much is it actually going to be valued once we kind of put together the numbers of, okay, we know that they're going to have basically this 900 million coming in over the next X amount of years, but we don't know how the payments are going to get broken down. We do know that's going to very much help their cash flow problem, because one of the problems with BBAI was they were really low on cash. Oops. I'll show you here. So their cash need was pretty high. They were literally running out of cash. And the only stuff they had, their SPAC warrants were here at 11. And I feel like this is a company that just got screwed by Wall Street, really, because it came out as a SPAC. They spent a ton of money on it. They had to like pay all these expenses, and their merger was really, really expensive to get them listed. And then Wall Street just dumped out on them. I mean, it went from literally like 80% institutional ownership down to 1.5. Like, they basically left this stock for dead. And these guys on top, in spite of that, basically were like, okay, well, that's fine. We're just going to succeed. So, maybe some of these, hedge funds came back in. But I mean, I remember looking at it was a laundry list of who's who of like smart money. We'll see on the next filing how many of these, big companies came back. But I'm telling you, I saw like Jane Street, Citadel, Susquehanna, like Goldman, like everybody was in on these guys when they came out on a SPAC, and then they all sold out. So, but this is an interesting one, because eventually this is going to be a stock that, if these guys actually are a legit player in Washington, because they've won 2 contracts now within and they're right next to, headquartered in Columbia, Maryland, which I believe is near DC. Yeah, it has additional locations in Virginia. So they've got basically like the DC area covered, and that's where all these things. So, it's not surprising to me. I was looking into this company, and I believe, one of the selling points for them overall was their executive team was pretty strong. They have, I believe, a CEO that used to be military, and obviously that's good for DoD contracts, and they beat on the earnings, but they got hammered down. And so, but yeah, I mean, they made a huge move up. It was at one point like 300% up. Let's see if we can see CEO. Looks like Mandy Long. Oh, she's the IBM one. So they actually, I guess maybe the former CEO stepped down and now is on the board. Okay, so they basically got an IBM person to basically, take over. So that's pretty bullish too. Management team. But yeah, I was looking into this, and because I think ownership. What does it say? What do they? MFG? I don't know that acronym. Is that like? What is MFG? I don't know. It's a ticker. What is the meaning of MFG? Oh, what do they manufacture? Okay. So they sell, I believe, an artificial intelligence that is data driven. So basically, they were one of the first ones to identify that Russia was going to invade Ukraine, and they sent all this information. No, sorry, not just Ukraine, but specifically Crimea. So they actually notify, because they were literally on satellites watching troop buildups of Russian soldiers, and they were like, something weird's going on here. So they contacted the DoD and were like, hey, you probably want to look at this. We've been kind of using our artificial intelligence to kind of watch military, units around the world, and this is what we found. And so they were one of the first people to ID the Crimea invasion. So this is a company that I kind of found a while back, and I told people I'm long on them. And I sold when they jumped over 10, because I said, listen, they've got $11 warrants, like this thing's gonna fall like a rock. So I sold and took profits, and then I jumped back in around like $3, and it's been averaging down when it went sub 1. And I actually literally wrote in the Discord that I think I wrote basically that all it takes is one contract, and these guys are going to be like really undervalued. Let me see. Yeah, I wrote it on December. Let's see. Here, BBAI. I found it here. So on December 29th at 10:26 a.m., I said, yeah, it's amazing how smart money like Citadel were at the right point and then exited perfect moments. I'm adding while it's under $1. Government contracts are feast or famine, but these guys are located outside D.C. One solid DoD contract and their fate changes. And the stock jumped 300% on that. So Kick says, APRN will squeeze tomorrow. Let's take a look. APRN's not squeezing. It's too much dilution. They've got $2.5 million cash. The warrants aren't going to affect anything. Oh, they have an ATM. Now, they may run, but I was going to say they're going to sell dilution into their run. So just like BBBY is doing. They've got a November shelf. Yeah, they're ready to dilute on you. Like, they basically have right here. Oh, yeah, they already started. They're already diluting because they needed the cash. So, I mean, it can move, sure, but it's not going to be like a squeeze. Look at this. This is why they're high risk. They're basically issued out an ATM so they could sell when they pump up the stock. So they get retail excited, and then they convince retail it's going to the moon. And then when you're buying, they're selling their shares to raise cash. That's how it works. All right. James, are you in the Discord group already? But yeah, I was going to say, it wouldn't surprise me. Let me take a look at APRN's chart real quick. I mean, they're definitely oversold. I mean, did they fill this gap here? How come I don't see the gap detector working? Because this is a gap here. It's not showing up for some reason. The gap detector does not like APRN for some reason. Like, there's a gap here. So, yeah, there's a couple gaps on this thing that I don't know why it's not picking it up. But so, yeah, I could definitely. Okay, you're single broke dad. All right, so we got gap there. So, yeah, I mean, this thing could move. You got earnings coming up here, but what my guess is this: they need the cash. They're gonna probably try to see if they can pump it up, and they'll probably issue out shares during when they try to pump it. So, but just be aware of that. Like, you know, they're actively diluting, just like Bed Bath & Beyond is. All right. And I think somebody asked about Carvana. Sorry. That was P. Chubb's Warren Truffle. Let me pull up Carvana. So Carvana is another interesting one because Carvana has been heavily shorted. And you've got some pretty big gaps up here. Like, I mean, we're talking about like, that's $260. There's a gap. 118 there's a gap, and then more recently 24 was a gap, and now we're sitting down here at 8 on Carvana. Now I believe I'm in the other one that's similar to this, like is it Vroom or whatever? Yeah, Vroom, which is like they basically kind of run with Carvana because it's like a sympathy play basically. But like Vroom's revenue was 2.6 billion. Carvana's was, what was the revenue? 12 billion. So, Vroom's like the little brother to Carvana. But they move together typically, and they kind of just like go hand in hand. And this is the stock that at one point, had like a huge market cap, and now it's just been beat down. So the question I'm kind of looking at for Carvana is, because they do have like lending, they do have like, like if I go to a dilution tracker, I'm not going to see, I don't think them have anything because they're too big. Like they actually have like, Carvana. But I mean, the short interest is 61%, and that's that high for a reason. It's not just because shorts are greedy, which they are greedy, but like it means the company's really in trouble if you're that confident that you can short like over 50% of the float. Now, here's the thing. You have one good earnings like that. We have earnings coming up here in February. If that was to beat for some reason, and I'm guessing the RSI on this thing is oversold to all hell, considering where it is. I mean, you went from basically $3.77 all the way down to $8. I'm guessing you're pretty low on the RSI. So, at some point these shorts are going to have to take profits, and that's probably what you're starting to see here in this run the last couple of days when I think part of this is shorts actually taking profits, I think. And that makes a lot of sense because why else would you see this across Carvana, GME, AMC, right? I think these are, literally like, oh, well, anything that retail liked, they're now closing out their shorts. And it's causing the price to go up, right? Even like Ethereum, like we've had some green days in the last like couple of weeks, and it's like, in the last 2 weeks, we've had some green days which were like almost never there. We might finish up a penny here, penny there, slight, but like, we've at least moved from like, what was it, 360 something, 367 was our low up to, 97 cents. All these like, meme favorites are all of a sudden rising at the same time. Even MMAT was not one of them. They need cash really badly. What was the other one? What was it BBIG? Did they move up at all? Not really. What are the other ones? Bayer, that's Prague. Yeah, they had a pretty big jump right there. I'm just thinking of like the old ones that everyone was like, to the moon. SST's pretty calm. What were the other ones? Oops. Anyone remember? Yeah, they may lose $600 million next quarter. They stop selling third-party vendors. Lots is a flaming pile of, right? I had somebody, wasn't that Tarifa's big thing? He liked lots. Are they even listed anymore? Did they delist? Oh, SFT is the new ticker. Okay. Yeah, I mean that's in the dumps. But yeah, I would imagine all of these things. Oh yeah, Smile Direct Club, that was another one. I'm just seeing like there seems to be this pattern over the last couple of days. And I know the market's gone up, but I mean like specifically these meme stocks that took a huge beating, they seem to all be going up at the same time. And they have been going down all at the same time too. Like I bet you if we overlaid every one of the meme tickers over each other, their charts would look at least somewhat similar. So, what's up, Acid? How are you, bud? Papa Acid. Dirty's here. We got Broke Single Dad in here. Who else is in here hanging out? Do you guys remember when we actually had like hundreds of people on here and people were like drinking and having fun? And now we're just like angrily talking about all these meme stocks being the dumps. but finally showing a little bit of light. Oh, those were the days. Wasn't even that long ago. It's like half a year ago. I guess it's coming up on a year. A couple months. All right. Does anyone else have anything else they need to look at? For the most part, I mean, I'll leave it on for a while, but I was gonna say Dirty's been finding some gems here and there. I still think DTC at some point is gonna run, and I know nobody, you know. This is a chart that's pathetically bad, but I mean, if you look at this consolidation down here has just been like just chilling. They're not, this is a stock that was in the 20s, now is just sitting down here, and it's just been chopping. And here's the thing, they haven't diluted at all. So, like, this is a stock that, like, if you pull up their ticker, they barely, they might have added, I think, 1 million shares in dilution. And then, no, that's not even dilution. That was like ownership, I think. But this is owned by a lot of institutions. I mean, it's still 76% owned by institutions. Most of the shorts already closed their position. It's just a stock that gets no attention. And it's got a small float, an actual float. So, like, yeah. That would be awesome for the red-eyed bots to come back and tell us. Now, yeah, they're running low on cash, and that's probably why they're down here at this level. But they do have some cash flow coming in at least, and they still have a good amount of people holding their positions. Some of them trim, but other people, you can see these guys added. They added. So there are people adding down here at this low level. So at some point, this may be right for a pretty nice run because, as it consolidates here, earnings is coming up here in March. Could it be one of these that chops around here and then makes its way to, 9, 10? Who knows? But that's one I'm keeping an eye on. Did you see the Wes Christensen interview about naked shorts? No, I didn't. I didn't have time today, but I did see that there was a post. Is it worth watching? I mean, yeah, I like that guy. I've seen him obviously through the GameStop stuff, and he did a interview with the Super Snock people. I mean, to be honest, I'd love to just bounce over on the SPY and have all of our long positions squeeze. That'd be awesome. But like, here's the SPY's chart, and at this point, you see all these gaps down here, gap, 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 and then you have one gap up here, and that would be we break through, back test, head up there, then we'd have to pass this test, and then hopefully go back up. But it could happen. It just seems like whenever everyone's feeling really good, this is the perfect time to rug pull. And right now, everyone's feeling good because you had this little run. We're like got a little scared here, then we pushed back up. Everyone's happy. People were talking about like, oh, inflation's going down. We're gonna have soft landing. So this would be, in my opinion, a perfect place to rug pull, which is why I bought some puts. But I mean, that's my hedge. But most of my positions are long. So as long as, I can always take a loss, I can do a stop loss on some of these options that I bought just as a hedge, and I'll take the loss on them if, everything else screams back up. So I'm not going solely those SPY puts are basically my hedge against, the longs all going down. So I think we'll get I was telling people at the beginning of the video, I charted this all out, and I know it's a little confusing with all these lines, but all I did was all these red lines are gaps. So all the red lines are gaps up here. There are no gaps below us. So there's no bull gaps. There's only bear gaps that need to be filled at some point. You've got a bear gap at 8. You got a bear gap down here at 4, 3, 2, 1, basically, like all the way down. Like the closest one is 188 would close a bear gap. So if you look here, though, all these turquoise lines that I drew out here, and I probably should make this one thicker. Sorry about that. Hold on, let me do that. How do I make it thicker? Maybe. I think it'd be. I don't know. I don't know how to do it. But this one in particular, let's see. Maybe you can do it on. Okay, but anyway, these two turquoise lines basically are where armistice got to buy their warrants. And these purple lines are actually where they're able to exercise the warrants. So right here and right here, they're able to exercise the warrants. This is what they paid for them. So they're not profitable right now. If you look back here, armistice paid $190 for the shares and the warrants. We're sitting down here at 97 cents. So their long positions, now my guess is still they're short, but their long positions are sitting down here. And at some point, if they can't push it down much more, then what's going to end up happening is they'll just switch long, push the stock back up, and then reshort it. So, but they can't exercise those warrants until this line right here. So we've got to do something in this time frame, before we get to this point where they're able to unlock them. So just wanted to point that out. But I've kind of got it all mapped out. We can see where they're going to be profitable. For this run, I think it's more the 3 to 5 range personally, unless they maybe push up to this 480 to close that gap. But I mean, we'll see. Yeah, I mean, trust me, I'd love to fill all these gaps up to 8, but I don't think that's happening anytime right in the immediate, unless they did a share buyback, but they'd have to have a bunch of cash for that, and they don't. So. Or their numbers just have to be outstanding, and they, just turn it around as a business in general. Besides that, though, the warrants don't mature until April 4th. That's correct. So they can't exercise the warrants until April 4th. That's when they actually can start, basically, exercising their warrants, as long as the share price is over $2. So if you think about that, if we keep getting pushed down and hang out in this range, if you're able to average down enough, if you can get your average below where they paid their 190, they're probably not going to just sell at 190 and break even. My guess would be they would want to push this up, and they still have warrants up here that they paid 290 for. So for their run, they're going to want to push it probably into the 3-4 range before they start selling, and then reshort it. So yeah, I mean, I'd love to fill that 480 gap as well. So that's kind of where I think this will go at some point. I just don't know if they're going to start it right on April 4th, or if they're going to wait 6 months and be like, these guys kind of know our game plan. But here's the thing, right? If you're able to basically, and this is if you want to get out. Some people might go long. We might get this earnings and it's much improved, and we go, wait a second, maybe this thing is more valuable than we think, and it still may move up. But you're going to have people that are going to sell just because they don't believe long term in the business. But what if we did get a soft landing and all of a sudden this thing does move back up naturally, and it's actually worth it because they improved their margins? So you never know. Yeah, I mean, once again, just, the more shares you have, the harder it is. And, I think guys like you, Kenny, myself, all know that it's harder when you have, a lot of shares to get that average down, unless you spend a good amount of money to basically chunk it down. But yeah, I mean, you think about how many times when we were sitting down here and it was, 3-4 weeks of just red days, it does something to you mentally. This is why it's hard to trade stocks, especially because they understand retail mentality, and it's it's fight or flight, and most of us are sitting there when our lizard brains are tinkling and going, oh my God, like just get out of this thing. Like you're going to have no money left. You're going to be broken on the streets. Like, it's hard. And so you have to just, the more information you can learn and better you can understand. I'm trying to look at this if I were a hedge fund. If I was Armistice and my game is this. My game is I get pipe warrants and I basically push them out, push them down as low as I can get. Once they kind of hit to a certain point, I run them up, I reshort them, and then, this is kind of what I do. This is my business model. Yeah. Yeah, Tanner, I agree. So, like, for me, I've kind of gotten to the point where I'm used to this. And so I just try to think about this logically on how this would go. Yeah, if you change the way you think about it, it's not as scary because like you have to be like, okay, does Armistice really would just want to hold the bag on $20 million? Like, probably not. They, especially if they can't get it lower. Like, if they push this down to 25 cents, then all of a sudden my buying power gets a lot, more because I'll buy up the whole company over time, and other people might too, and just your retail gets a lot more power when it gets really, really cheap. So throwing that out there, all of a sudden, when the stock's $8 a share and the float's small, it's one thing. When the stock's got 100 million shares and it's sitting there at $8, yeah, that's a ton different. Because I can't buy up the float, but at the same time, you know, if it's like a penny, all of a sudden I've got a ton of buying power, compared to, I think that's what that one guy did when he locked up the entire like shares outstanding. Like this, I don't know if you guys saw it, but this guy to prove his point, which is the markets are the wild, wild west. He went out to a penny stock and he just spent like $1 million and bought every single share of the stock and wanted to see what would happen. In the next 2 days, the stock dropped. Like the stock tanked on price, even though he had every single share. The stock kept trading and they kept hammering it down. And he's like, this is impossible because I own every share. But that didn't keep the market to, from basically naked short selling, and because there was no locates. But this is how the markets still work. Like they're supposed to locate shares before they short them. Do you think they actually located those shares? Nope. So, that's part of the problem with these small caps is they basically get screwed, and then nobody, and they get naked shorted probably, and they get hammered down, and then every single time they need money, they have to dilute more because they get pushed down by these targeted hedge funds, and then eventually, they get wrapped up or they squeeze and go, really high. That same thing happened to Tesla, but with Tesla, every single time they squeezed higher, when the shorts couldn't get it down any lower, they had to cover. It would go the other way, and Elon would issue an ATM into their squeeze and basically raise billions of dollars. Eventually, towards the end, he was raising billions, but like he would raise a couple million here to keep the cash going and keep building and expanding. And so every single time, they would just dilute more, raise more cash, and eventually now they're on the S&P 500. So, yeah, 100 million shares is not a ton of shares if you turn the corner, if it's profitable. Yeah. I mean, and if they were actually doing well, they could always do a share buyback if they wanted to reduce the float. But, you compare that to, I don't know if you guys know this, but one of the ones that, so has anyone looked at how many shares of Nokia exist? I don't know. Can we see? Did they tell you here? I wonder if they tell you here. Because I know it's high. Shares outstanding. It's like 5 billion shares exist. Yeah, we'll just type in Nokia shares outstanding. Yeah, it's 5.6 billion shares outstanding. Just throwing it out there. Yeah, that's any money losing stock. Tesla became profitable. Yep. Are you opposed to a reverse split? No, I'm fine with a reverse split. Everyone keeps crying about it. I don't. There's no difference. Just changing it. I know people are like, oh, then people can short it back down. They can short it at any price. It doesn't matter. Like, whether it's $10 a share or if it's under $1 a share, they're still going to short it if they want to short it. So no, I don't care about a reverse split. It can go either way on those things. And honestly, to me, it's just shuffling the chairs around. It doesn't make a difference because monetarily it's the same thing. So I know it's more mentally, like, for some people, they look at it, and I'll be honest, it's education. If you don't understand how floats work, if you don't understand how this works, then yeah, you could go, oh, well, this is a $10 stock versus a dollar stock. So the $10 stock must be better. It's the same people that, I'm friends with that are like, oh, did you see before Amazon split? They're like, did you see Amazon was like 3,000 a share? They must be doing so good. And then the same people were like, oh my God, Amazon's only like $100 now. Like, it's so cheap. Like, what happened? And I'm like, you guys are idiots. Like, these are like educated, like college educated people, but they just don't do anything with finance. And so they don't understand this. And they're not really idiots. It's just, but like, if you kind of have to understand at least how the float works and how, so yeah, to me, reverse splits aren't even that big of a deal. Yeah, I mean, you have a better chance of squeezing if you have a smaller float. That's the honest truth. Yeah, I mean, they'll short on anything. It doesn't matter. They can make some money, and they know that retail at this point is scared off of Ethereum, so they're going to keep shorting it because they can. They've shaken the trade long enough that, pretty much everyone's out, and then even like half the people that are in want out. So they've succeeded on it. They've succeeded to shake the tree enough that, everything's there and everything's out. So the only people that are left are bag holders, like, some people who are just long, and the shorts. That's why the volume's so low, because nobody's there. So, all right, guys, I am going to head out. It's like coming up on 11:30 here. So you guys have a great evening. I'll talk to you guys in the Discord tomorrow. Hopefully I have a little more time. But I do want to work on the scanners and some of these spreadsheets that I've, kind of designed over this time. And we can start maybe tracking and, Dirty, I think you and I can work on that. So you guys have a great evening, and we'll kind of go and, get into it next week and hopefully find some new plays, and we can get going from there. All right. You guys have a great night, and I'll see you in the Discord. And if you're not part of the Discord and want to, if you listen through I can put a link in there. Let me just throw a link. This Discord is free. You can come hang out and just talk stocks and nerd out with us. Okay. There you go. You guys have a great evening. Why does it ask me for my password? Let me try it a different way. Sorry. I will throw it in here. I got an ad here. There. We threw it in. Night, guys.